So in this example, we will look at something called as the dark cloud cover. If you are new to candlesticks, you will learn this pattern and you will also learn how the dark cloud cover becomes a very powerful pattern if it is confirming some prior resistance area which is created by a falling window. And we will look at what is a falling window as well. This is a daily time frame chart of Tesla. So let's look at what is happening on this chart. Okay. So the price starts to come down from here and you have a falling window between these two candles. It's called a gap in Western technical analysis. So that is why I have drawn two blue lines here. This is the upper line, this is the lower line, and the entire window becomes resistance. The falling window becomes resistance. Okay. The upper line is a more powerful resistance than the lower line. So that's the falling window for you. Second, let's look at the dark cloud cover pattern. What are the conditions for a dark cloud cover pattern? This is a two candle pattern, these two candles. First condition is it must come after a uptrend. Second condition is the opening of the second candle should be above the high of the first candle. Next condition is both candles should be opposite in color. Next condition, the first candle should be green in color, the second candle should be red in color. Next, both should be preferably long real bodies compared to the other candles on the chart. And next, the dark cloud cover, the high of the entire pattern. So this is the high of the pattern. The high of the pattern becomes resistance, and this is a bearish reversal pattern. Most important condition for a dark cloud cover is that the close of the second candle should be below the midpoint of the real body of the prior candle. So if this is the midpoint, then the close of this candle should be below that midpoint area. So those are all of the conditions for a dark cloud cover. I have discussed dark cloud cover in my Japanese candlesticks trading mastery program. You can go to this link. There are multiple chart examples I have given for a dark cloud cover. It's a very famous pattern and it's a bearish reversal pattern. Bearish reversal means after this pattern, the market is either likely to go flat or down. The probability that either of these two events happen is very high. The probability that the market will go up from here is very low. Okay, that is called as a reversal pattern. Reversal doesn't mean that after this dark cloud cover the market will go down. Now this dark cloud cover is confirming the resistance created by the falling window, because as you can see here, none of these candles have closed above the resistance created by the falling window. So the failure to close above the falling window's resistance means that the market is bearish here. So the confirmation of the prior resistance is adding to the probability that the market will reverse from here. Again, reverse means either flat or down. Any of these two things can happen. Now, if you look at this chart closely, there is a rising window here. While the market was ascending here, it created a rising window. Just as a falling window becomes resistance, a rising window becomes support. And the rising window has two lines which I have drawn here, the upper line and the lower line. In the rising window, the lower line becomes a more powerful support than the upper line. So now you have a situation where you are expecting the market to go either sideways or down, right? But because of this window, which will act as a support, the probability of this event happening is very less. So you can expect the market or the price to get sandwiched between this support and the resistance zone, right? Until eventually it will either break this way or this way. That is what you have to wait for. So in such kind of situations, I don't do anything. I just wait for the market to establish a clear direction, and then I go in that direction. Okay. Now in this case, it's not just one window which is acting as support. I think if you zoom in between these two candles, you might find another rising window. Even a small window is a window. Okay, it's very powerful. Again, there is a rising window here. So all of these are support: S1, S2, S3, S4. All of these are support. That is why you cannot take or you cannot initiate a trade on this dark cloud cover. Remember, the dark cloud cover is a very powerful candlestick pattern. You are allowed to take a trade on that pattern, unlike patterns like Harami, where you are not allowed to initiate a position. You can exit an existing position, but you are not allowed to exit, but you are not allowed to initiate a new position. So this can be a bull Harami or a bear Harami. Then there is a star, then there is a doji. These are patterns where you cannot initiate a new position, but the dark cloud cover is so powerful that you are allowed to take a position. So for example, if these windows were not there, let's assume that these windows were not there, so you have a clear sense of direction here. So you could go short here. That's your entry point. We know that the high of the entire pattern becomes resistance, which means whatever is the high of these two candles, that's resistance. So we can take that point. That becomes our stop loss, and you can expect the market to go down and test this. So that becomes our target. So this is your reward and this is your risk. So as you can see here, the reward to risk is easily between uh, 2 or 3, 2:1 or 3:1, right? You have to do that measurement. But this is assuming these windows were not there. Okay, this chart is volatile, it is Tesla, so that's why there are a lot of windows. When there are windows, it becomes difficult to put on trade because you never know which window will become support, right? As you can see here, this falling window has become resistance, so you have to respect the windows. And this is the precision of Japanese candlesticks, right? It has crossed but not closed above the window, correct? Look at the opening of this red candle. It has opened within the window, but the most important price is the close. The close has been below that resistance. That is very important for us. Now we are expecting the price to go like this because it is sandwiched between support and resistance, right? So let's see what happens on this chart next. So as you can see here, this is what we expected, right? You look at this candle, could not break the support of the rising window. You look at this candle, could not break the support. It opened within the window but closed above the window, right? All of these candles, 1, 2, 3, 4, 5, 6, 7, 8, 9. So total 9 days. This is a daily time frame chart, right? For the total 9 days, the price remained sandwiched between the support and resistance until it finally found a direction at this candle. At that particular candle, the market finally took a direction. And look what happened after that candle. The market went down. So these kinds of situations are difficult to trade. There are some aggressive traders who might wait for this candle, put an entry here, go short here, and keep their stop loss here. So it's a very wide stop loss. They don't keep a target. You don't always have to keep a target, right? Because this can become a target, this can become a target. So there are traders who might want to go short here, aggressive traders, right? They might want to keep their stop loss here and then don't put a target. Just watch the chart candle by candle. This candle was the real battle point because this candle failed to close above that rising windows support. So that candle is confirming that old support becomes new resistance. This is called as COP, which is change of polarity. So this candle is extremely important. It confirms the change of polarity. Change of polarity means old support becoming new resistance, or vice versa, old resistance becoming new support. Okay, so in this case, if the price had broken above the dark cloud cover, then this same resistance would have become support and the price would have bounced from here. Okay, so that candle is very important. So all of these four candles, if you see, this candle confirms the breakout, this candle confirms the change of polarity, and this candle finally confirms more bearishness. So this is the candle where you could actually think of taking a trade, because you are getting a lot of confirmations. You could go short here, and then you might want to keep your stop loss here or here, and some people might want to keep their stop loss just above this newly established resistance zone. That's a very aggressive stop loss, but depending on your risk appetite, you can decide what to do. But eventually the price went in your favor. So that's how you would analyze this chart. And observe, I have not used a single Western indicator here. Without using a Western indicator, I have provided you so much analysis, because the candlesticks tell you a story. Every candlestick represents a battle between the bulls and the bears, and always focus on horizontal resistance and support lines. I'm not a big fan of angled trend lines like this, because you can draw trend lines in multiple different ways. But horizontal lines is something which you cannot argue with, right? And look at the precision here. Till this candle, the price remained sandwiched. Okay, when you look at such kind of price action, do not be surprised, because you are just, the market is just trading in that zone between the resistance and support, and your view was correct. The first signal that the market is turning bearish came here with this dark cloud cover. Simply just two candles told you that there is something wrong in this market. And by the way, round numbers also play a very important role. There is something wrong at the 260 level. The bears are not allowing the price to go above that 260 level. So round number is a concept which I teach in level 2 of my Japanese candlesticks trading mastery program. Have a look at that link. There are multiple levels of trading there. I have put this link in the description box as well. It has 1000 chart examples. Thousands of students from more than 170 countries are already doing that course. So once you do that course, you will learn to read charts like the way I have read this chart for you. Okay, so if you want to learn that skill, go to that link and start with level 1 of the Japanese candlesticks trading mastery program. It has 20 videos just on dark cloud cover. Okay, plus there are 7 other patterns, and each of those patterns has got 20 videos each. So you will learn each and every pattern in detail there.